Hello and welcome to Buy, Hold, Sell. My name is Vishal Teckchandani, and in this episode, we're running the ruler over those stocks which have been naughty and nice this year. To do that, we're joined by Junbei Liu from 10Cap and Hugh Dive from Atlas Funds Management. Thank you, both of you, for being here.
Thank you, buddy.
Hugh, let's kick off with you. Regis Resources up 187% this year. Not bad for a gold miner.
Yeah.
Buy, hold, sell.
I'd be selling here. Had a great year. Everything could possibly go right. The metal itself is up 60% versus up 190%. And invariably, there are production issues. I'd like to, if I was going to be buying gold miners, I'd buy ones that have trailed the metal price rather than didn't. You look through their book, there's no hedging. That's great when the price is going vertical, but that doesn't always say the same. A production issue could see that sort of turnaround. It's hard to see them replicate 190% in 2026.
Junbei, can the luck continue or the strong run in gold prices keep benefiting Regis Resources? Buy, hold, sell.
That will be a sell. The many questions there. So I think the gold prices is still well underpinned and everything else. I always believe every portfolio got to have a bit of everything. You have to have gold in your portfolio. But because it's done so well recently, I will be selling small cap gold and putting into more the larger cap names because they have done a little bit less as well as these ones. And then the larger cap will have this tailwind because they have longer dated contracts. And then their prices that are not spot price. So over time, the money they make will gradually get higher. So, they have the next tailwind. And because they haven't done as well, they will give you a little bit more benefit. So we'll be going to the Northern Star or the Newmont.
Staying with you, Junbei, Codan up more than 90% this year. It's been a fantastic ASX small or mid cap. Buy, hold, sell.
It's a hold for me. I like the company and will be shareholder for quite some time, but it's done incredibly well. The company really diversified itself from the metal detector business into other area, the communication space. And it's well played into that whole defense sort of thematic where, countries really going into spending a lot and then the communication play right into it. I think it's really interesting thematic. It's just becoming a little bit more expensive. Great management team though, so I'll stick with it for the hold.
Hugh, same question to you. The defense thematic continues to run hot, but is the stock a buy, hold, sell?
I have to say a sell here. I agree with Junbei, the military and the communication is very solid, and that's really improved the high quality of their earnings. But a bit of the icing on the cake of Codan is the gold detection business. Selling a lot of retail gold detectors, the bleep, bleep, bleep over there. A lot of that being sold into West Africa. Historically, that has been very correlated with the gold price. And if we do see sort of a fall off, we'll see that some of that cake come off at 45 times forward earnings. There's not a lot of margin of safety for that.
Our final nice stock, Charter Hall, up 73% this year. Buy, hold, sell.
They've executed on whatever they've done. They've benefited also quite well for that rotation out of Goodman, growing the funds management business. Been a very perfect year. I do not own this stock, but if I did own it, I'd probably still be holding it, but I wouldn't be buying anymore at these current levels. They've executed well, but a lot of it is predicated on expectation of falling rate cuts, which may or may not happen, causing sort of investment flows into listed property and seeing some property revaluations upwards.
Okay, Junbei, it is a market darling right now. Great upgraded guidance, strong inflows, property market booming, as it always does in Australia. Buy, hold, sell.
Look, it's a sell for me. It's done so well, as Hugh mentioned. It's done very well. It's a big part of it is because the interest rate cut. Remember the property trust, the companies are benefiting a lot from a lower cost of interest costs because they borrow a lot of money and they gear up a lot, and interest lower, so earnings grow. So, generally a lot of earnings upgrade just simply on lower interest. And then secondly, there are a lot of their property exposure is commercial properties, and then so the valuation, lower interest rate, valuation is going higher. Now, 2026, I don't have the crystal ball, but every economist tells me there's no rate cut anymore. So, if anything, someone's saying, rate rise, but let's say no rate cut. I think property trust companies done in terms of valuation expansion. So is the office market really going to turn around in a big way to drive the earnings upgrade? I don't know. I still see empty offices. I think Barangaroo is still pretty tough in Sydney, moving to the different area. So I think office is not coming back in a big way, slowly perhaps, but there are cheaper offices you can buy. So for me, it is too expensive. I'll sell it to buy other, probably more residential exposed property trust. That's even better value.
Okay, so turning to the naughty stocks now, we begin with Bendigo Bank. Had a little issue recently with money laundering. Buy, hold, sell.
Oh, that's a sell. I'll sell more. Look, I think it's going through a lot of issues now. When you have the money laundering issue, then you have regulators overlooking you. Then you got to pay big fines. All of these will take a very long time for the regulator to go through what sort of real problem is, and companies to investigate themselves. That's all distraction to the management. We've never seen a company outperform outperform during these times, it's absolutely a sell.
Hugh, if I think about Bendigo Bank, it's just been among the flattest performers in banks. It just kind of sticks around that $10 mark eventually. Buy, hold, sell.
I think when I moved to Australia from Canada 20 years ago, it was at $10, and that's where it is now. Fundamentally, in addition to the problems that June Bay has talked about, regional banks are at a competitive disadvantage. They have a high cost of capital, low ROEs. Bendigo's market share is roughly about sort of 2.5% to 3%. They have lower tech spend, which results in sort of higher perhaps some of the money laundering issues we have. I'd rather pay an extra couple of PE points and own ANZ. Regional banks just, hard to get very excited about it. And as sort of June Bay talked about, going through regulatory fines, we've seen with sort of Westpac, that was not good. I'd rather sit this one out and watch it from the sidelines.
Okay, fair call. Staying with you, Hugh. WiseTech Global, little controversial as well over the past year. Buy, hold, sell.
I think a sell. I know that June Bay quite likes it, but just I perhaps don't have her appetite for risk. Also in my portfolio, we did own mineral resources, so there's probably can't have two bad boys in the same portfolio. There's been a range of issues, in addition to the salacious details covered in the financial press, not Livewire, but other salacious details. They've had obviously share trading issues with the directors. The outlook looks relatively opaque. They seem to just keep on coming, and just too expensive for us, trading on sort of 78 times earnings with a microscopic yield. I don't know how much this keeps on sort of going there. I mean, perhaps June has got a better insight into me, but it's going to be tough work, and it seems to be just keep on coming.
Okay, now June Bay, you love your contrarian stocks. It's been hammered, but is bad news good news? Buy, hold, sell.
Yeah, it's a buy. Look, it is a high risk buy, not for faint-hearted. You stole my thunder there. It could be a sell. Putting aside other issues, I just think it's quite an amazing business. And there's been a lot of skepticism over the years, and they've proven them wrong. And it's one of the very few businesses. It's actually quite rare to find a sort of more almost SaaS-like business that growing that fast and that profitable around the world, right? So that has a global market share. That's just been incredible, and hence why I think it's very, very unique. It's something that we always look for. It's unique. It's a market, addressable market, and then execution. Now, of course, there's other issues that relevant. Personal issues with Richard and others. That'll come into fold. That simply means probably it's not a big position in the portfolio, right? But I do think that there's a lot of bad news in the share price, bad news that's not relevant to the company. They are moving into, they see in the future, they're moving into a more, transaction linked in terms of pricing model, and it seems to be tracking well at this stage. And, analysts don't have these in their numbers, which is great because you want to outperform people's expectations. So I think expectations reasonable, and I think the company has given many opportunities, not really downgrading the earnings. So I think the business is holding up pretty well. If anything, might be outperforming expectations in the next 6 months. I think it looks pretty good.
Okay, the final stock on the naughty list, Bapcor. I think it's lost about half its value this year. Weaker consumer spending, lower auto parts demand. Buy, hold, sell.
Oh, that's a sell. Look, sometimes companies, previous market darling, but when company go through its structural issues, it become much more significantly more competitive, in the category they're in. I just don't think it's going to return to its former glory. It's a sell.
Okay. Hugh, is this a dog you want to touch? Buy, hold, sell.
Unfortunately, I've touched this dog during the year.
Oh.
So this is a bit of I own this for a large chunk of this year, not for the full 50%. I think the mistake that we made with that is thinking the trade was going to come back on, there was a private equity bid, and just ignored the extreme level of corporate turmoil. We saw 3 directors walk out the door in July, with not a great level of expectations. Since then, with the corporate we sold it right after reporting season, the corporate turmoil has continued. We've seen another director left yesterday, 2 key management personnel left about a month ago. Far too hard, and particularly after having enduring some of the pain in 2025, I'm not signing up for another year in 2026 with Bapcor. Sell.
Okay, well there you have it. My friends, enjoy your Christmas gift. Some nice stocks that deliver joy in 2025 that can continue the momentum in 2026, and a few naughty ones that left some coal in your stockings. Hugh, June Bay, thank you so much for your time.
Thanks,
you.
I hope you enjoyed that episode. Please don't forget to like this video and subscribe to our channel. Again, good luck in 2026. Have a good day.